time for our weekly financial forecast. We're talking about taxes today, something that we all love. No. And we're talking with Chartered Financial Analyst Ron Wright of Fitzwilliams Financial. Thank you so much for taking some time.
Thanks for having me, Janet.
All right, it is February. Any tax moves we should make before the filing deadline?
Yeah, there's some bad news on that. There's some good news on things.
Okay.
So, when the calendar year ends, most of options for dealing with your taxes end
Shut
right
down.
there as well.
Yeah.
But there are a couple of things that can still be done. When you think about IRA contributions can still be made. Mm-hmm. And if you have a healthcare savings account, an HSA, you can still make those contributions as well. So there's some things that you can do to help to lower that tax bill a little bit. Mm-hmm. The good news also, though, is that because of changes that were brought about by the One Big Beautiful Bill Act, there are a lot of things that are going to help those taxes. And most people will probably see larger refunds than they have in the past because of these changes. So there might be some really positive surprises in store for people.
What are some of those changes?
Some of those changes are there's a higher standard deduction level. There are some additional discount things that can be done for people, seniors and people. Up to $25,000 of tip income can be written off. So these deductions are there, and they'll make a difference because they're new and they'll be very helpful, particularly for people who generally are at lower income levels.
Okay, all right. How do taxes factor into my investment and retirement accounts or activity?
Yeah, that's really important to think about because taxes are one of the things that can really erode your investment returns. Not just on a year-to-year basis,
right?
But what a lot of people don't think about is that when you look at your 401k balance or your TSP balance, you think that this is my nest egg and I've got it. What you don't realize is that the government has a claim to part of that nest egg because when you take those out, you're going to pay taxes on them. So you have to be very aware of what's going on, and that means you have to plan. And that's probably the best thing you can do right now is start planning for your 2026 taxes.
Okay.
To be ready for what's coming up ahead.
Yeah, so what are some things, that's a good point. What are some of the things that, let's say you didn't do much of anything in 25, and so now the window is almost closed. What are some things to do right now, or, to get ready for next year?
Exactly. One of the most important things, of course, and from my perspective as well, is to make sure you're saving enough for your retirement. Make sure you're taking advantage of all those things you can do. If you're in a company that matches your 401k contributions, you want to make sure you take full advantage of
that.
And then you also want to take advantage of tax-free savings things, such as a Roth IRA, because in the future, that's going to really be helpful. And then you want to start looking at things like, what am I doing with charitable contributions? Is there an organization I really want to sponsor or really want to help, or my church or something along those lines, and start pulling these things together and planning how you can group these kinds of deductions together to maximize that.
Yeah, to make a difference.
So you can be ready come 2026 tax time.
All right, thank you so much. I appreciate it.
Absolutely, thank you.
Right. Well, the Financial Forecast airs every Tuesday in our 4 p.m. news. So if you have questions you want answered, email us at financialforecast@13newsnow.com.